Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Thursday, September 15th. It is 7:17 as I'm starting the video this morning. Quick look at futures, just marginally ticking red. Not a whole lot going on. We got a big day in macro, though. Jobless claims, Philly Fed, retail sales, Empire Manufacturing, industrial production, business inventories, and import-export trade numbers. So a lot going on macro. What sticks out to me is retail sales. See what if the consumer is keeping up, and industrial production are the ones that I'll be looking at most closely. But, a lot of the, like Philly Fed and Empire Manufacturing, can give us, month to month kind of reads on what the outlook is. And as always, don't forget to run your player at 1.5x. Yesterday was not much of a day. I mean, there's always stuff going on, but more or less consolidation after the big drop that we had on Tuesday. So what I've done in the chart deck today is go through each of our charts, but give you the best look for going forward. And I want to show you some weekly charts, some daily charts, and some 60-minute charts, along with a couple of positions we've been in and out of lately. So starting with the dollar, we had popped back up above that 109. I think that remains an important pivot point. And of course, if you're interested in trading the dollar, you can. If you're not into futures, you can look at UUP. That's a tradable ETF for the dollar. So I think this 109 level remains important. And as we've been talking about on TLT, I think 108 is your clear pivot here. We had a little breakdown, and now we're back up. Remember, a rising TLT means falling rates, and those that situation is positive for stocks. If we see this turn out to be a little back touch, a little breakdown, a little back touch, and then it starts falling away, that's going to indicate rising rates, and that 3.5% is going to be really, really important. I have not done a lot of work on rates, but I'm pretty sure that 3.5% is the top of a big channel going way, way back. So, we get a breakout above 3.5%, you're going to see, TLT take a nosedive. So, and that would be very, very bearish for stocks. You'd probably see the dollar do a moonshot as well. So those remain key as far, even if you're not trading them, good reads on the market. And as we talked about on TLT, that's a good one just to keep on your matrix, to watch during the day. Is it generally rising or is it generally falling? And that can help you in your, hour-to-hour tactical trading. Moving on to the VIX, off a little bit. I think the key levels are 29 and 25. Generally, during the day, you just want to look for direction. But if we were to get a breakout above 29.30, then that's going to open the door for a big volatility spike. And if it comes back and loses 25, then that's obviously going to be bullish for stocks. What I've done on Bitcoin is give you a 60-minute look if you're into trading that. Some levels jump out at me. One being right here along this line of 20,400. You can see a lot of rejections along that line, and then we had the big breakout, and now we're back below. I think you could use that as a near-term pivot if you're actively, trading Bitcoin. As long as it's below, the door is open for back down to this 19,500. But if it can break out, you can see that there's a pretty big void in the charts here that could see prices lift into that low 21,000 range, maybe 21,100, something like that. Moving on to oil, we broke above that pivot at 88. Still, the declining 20-day exponential moving average is capping that. So on oil, I think 88 remains your pivot. If you're not in it and you wanted to, set a trigger, I got that moving average at 89.09. So if there's a pop this morning and you want to get long against the 20, that would be the place to do it. Or if we go, if we lose 88, then recapture it, then that would be a long as well. As we've been talking about on the oscillators, we're right here in the middle of the range. You can see yesterday there was, not really any movement at all. Same thing in the NAMO, hardly any movement at all right here in the middle. Hard to pick a direction in no man's land. Moving on to SPY, you can see here, little doji candle. We took a look below, took a little look above, and basically ended up right back where we started. I think the focus remains 390. As long as 390 holds, I think, a doomsday scenario is contained. But you break 290, then you're on the wrong side of this main pivot line here. You can see all the rejections, the support and rejections along that line. It held last week, and now we're back down testing it again. So if there was ever an alarm you wanted to put on SPY, it's going to be 390, because below 390, then everything has a definite bearish tilt to it. As far as your tactical trading today, you can see this line that we had yesterday, right in that, call it 395.50 area. A lot of rejections along that line. I think that is the pivot for today. And then here you've got your 390 down below where it survived two tests. We had a bounce here and then a back test. And then we had the nice move higher. And then we had the reversal the other day. So those would be the levels that I would mark here today for you active traders. As we move on to the Qs, little trickier setup, I'd say. We've got a level here at 295. You can see that's where we have the main line of reactions across the top. Now, we had undercut that last week, and we had the quick recovery and then ramp up and then the reversal. Now, the other day we undercut that level, but now we've regained it. If we go down and we hit that 290, to revalidate this low, that's going to be an important level. But I really think to stay secure, I think long above 295 tactically is the right way to go. And then if we may come up to test the bottom of this gap, but at any point if we roll over and then lose this 295, I think that's going to be a bearish move, even if it's only to come down to 290 and hold there. So I like 295 as the main pivot, and you can see that here. Actually, it's 296 on the hourly chart. Get a break above that, then you got a legitimate chance to come up towards 299, where you'll get the downtrend line, and then 300 will be a big level on the Qs as well. IWM. What I did here is change the draw a little bit. I dropped this down. You can see where the uptrend line, we got starting point here. We almost got a touch here, touch here, touch here. I think that line is pretty strong. You can see we had a reach back yesterday. Did not quite touch the trend line, but then popped up. I think 183 is a good level to use as a pivot today. You break above that, I think you'll come up here and test the bottom of this gap. And then as we zoom down, we've got this large volume over price bar here, basically creating a little resistance zone between 183 and 184. We've got the hourly downtrend line coming in to, muddle things up. What you could do here, and this is all just, trader personal preference, but you may get into a little chop zone here between 183 and 184, and you've got the downtrend line coming in to 184. So what you might want to say is, you know what? Let's just watch this. Let's set an alarm at 184, and if that triggers and you start to emerge above 184, it'll tell you two things. Number one, we're now above the high volume over price bar. We got through that resistance. And once you're through that resistance, that will again become support. And you will have broken above the downtrend line, which is also a bullish signal. So then at 184, I would imagine a move up to 186 to at least back touch the bottom of the gap. And if you're already long at that point, you can decide to, roll up to 186 and book that $2 of profit there, and then see if the gap can be filled up towards 190, and then that would be, a really, really nice outcome. So you may want to just keep your powder dry until you get that break above 184, and then hit it long. On the downside, you can see 182 has been a level that has held with some long tails below. I think you can, price could go down to 181 and, bounce there. But I would be very cautious below 182, because really there's not a whole lot there stopping it from 178. So you'll have to decide where your short entry would be, whether you want to take a shot at being short against 182, or you're going to wait till 181 fails. Those would be my two locations of interest. What I wanted to show you on Meta is just how critical a situation that stock finds itself in. Weekly chart, we got price testing I think yesterday I said 150 was the COVID low. Not really accurate. COVID closing lows, right here. We had deep looks down below that recovered by the end of the week, and you can see that's where the volume over price bars, drop off. So simply put, Meta's got to hold 150. Now, this bar is not going to finalize until Friday, right? Because it's a weekly bar, but that's where we're at right now. And you can see on a break of 150, I think you'll find 140, 138, whatever this number is down here, to retest that low as a first target. But on the bigger scope of things, we've given, the stock has given it all back. We're back down to where it was in COVID. And I think as you go through your charts, whatever you may be trading, take some time to look at the weekly charts to just see what the relationship is between price right now and where it was back on COVID. And so if the market decides to fall apart, those would be, I think, really good targets on whatever kind of chart that you're testing or trading, of potential target areas for price. Apple here on the daily, we had this low, the June low, back here down at 130. We got the big move up to 176, and now we've had, essentially, I dropped in the Fibonacci retracements on from high to low, and now we've had a 50% retracement. Now, one of the things that I think you can do, you can see the 200 comes right in here at 155. That could be a really nice toggle point for you. We're 155.31. So notice all the candles in and around 155. I mean, price knows the 200 is there, right? Price knows everything. And so you could be of two opinions. One, the thing is going to roll over, or two, well, hey, it's a 50% pullback within the context of an up move, right? This is a very typical, move, 50% pullback, and then resume the uptrend. I think what you could do here is keep the 200 in mind. If you got a break above 156, get long against the 200, right? You got the 200 here that should act as support. You get a break above 156, get long, and see if you can get a move back up to test at least the bottom of the gap, and potentially even go up and fill the gap up towards 164. Or if you see price move down, I would hold your fire until you got down to back below the 50% retracement right here at 151.50. And if you lose that, that was his prior high back here, and it was support back here, support back here. So there is a line across there, and you can see there was a breakout and a back test right there as well. You lose that, then I can almost assure you that you're going to get a move down towards 145, back towards this 618 retracement, and this higher volume over price bar there. So those are the potential moves for Apple. I would be keying off a 156 and 151.50 on Apple. Tesla remains strong. And if you were, on the ball and had, your alarm set from yesterday morning, what did we say? We said that 295 was going to be a buy on a recapture, and that happened pretty fast right out of the gate. We opened down here at the bottom of the box, this box here, and we popped above and went straight back up to fill that gap. That was a nice trade, and if you got that, congratulations. And then we had a little pullback to the bottom of the box, and now moving back towards the top. I would have 305 alarmed. I tried along here and got stopped out. But I think Tesla has been showing some good relative strength, and I think a break above 305, you could look for a move back to these highs right along 312. So I think Tesla looks pretty productive. Jumping over to Microsoft, I wanted to show you the daily chart. We are testing the bottom of a trading range that goes from like 252 to 270. So that's $18, right? Yeah, 252. I always have this trouble. Simple math. You can see the trading range, bottom of the box, top, undercut, top of the box, bottom, top, breakout, back test that failed, and back into the old trading range, bottom of the box, held, top of the box, held, bottom of the box. So chopping around within a wide range, I think you can be long against 252 right in there. But if that breaks, I think you're going to come down here, probably actually certainly test the June lows down towards 241. And then if that breaks, it's, basically all over. So really important trade location for Apple here at the bottom of a box. Amazon, 60-minute chart this time. You can see we're at the high volume over price bar here at 127.50. I think you can be long against that. A move above 129.50 would open the door for a test of this gap. And then, there's some intermediate resistance points within this gap. But you lose 127.50, you're going to come down here to 125 and possibly even 124 to recheck this low. And we see we've still got a $2 gap to fill on the downside. So I'd have some alarms set at 129.50 and 127.50 for potential moves out of that little trading range. Here on Google Daily, a lot like Microsoft and to an extent Facebook, Meta, we got a $13.50 wide trading range that goes from 105 to 118.50, and you can see all the toggling, bottom, top, bottom, top, bottom, top, bottom, top, little baby bull trap, back in the range, targets the bottom of the range. We made that, and now price is wrestling with 105. And from the width of the chart, you break 105, then your measured move target is 1350 below the range, and that would bring you down towards 91.50. So if you're looking for, or the situation develops where you want to put on a swing short, multi-day, even multi-week type swing, you get a break below 105, then you can be short against 105 with a stop just above, and see if you don't get that move down into the low 90 range. Just remember, support is support until and unless broken. You can see, like in this example here, there was a look below, but then quickly recovered. So what you're looking for here is a daily close below 105 to take your entry there, and then with a stop just above. Netflix, I jumped over to the daily chart just to give you a picture. We had been tracking this $40 wide trading range for a couple of months. We got the breakout at 205. 205 plus 40 is 245. We got that move, right? That measured move right here. Took a little peek inside the gap, failed, and now we're back into this narrow band of trading between 220 and like 232. Those are your key levels, right? And you got the 50, the 20, and the 8 all within this little range here. So I think either a breakout or a breakdown has the potential to be somewhat of an explosive move, because you can see whenever you've got a tight trading range, energy is going to be building, right? Building. The bulls can't get anything going, and the bears haven't been able to, effectively break it. So energy is building in this chart. And so what I'd like to see you do, and this is for swings, not for, active trading. I mean, you can, if you're sharp and you're good, you can, trade this $10 range during the day, buy it at 220 and then sell it at 232 kind of thing, up and down through this chop. But for those looking for a longer term type trade, I'd have 220 alarmed, and I'd have 232 alarmed, and you get a breakout or a breakdown outside of this range, then I think you got the chance for a multi-day move that could pay pretty well. And then for an even bigger move, if price were to come back to 205 and fail, then where's your target? It's down here at 165 at the bottom of the box. So that's your $40 measured move target if price were to, roll back over and re-enter this trading range. And I'm sure if you saw that, the whole market in general would be, most likely rolling over. Another trading range here in semis, really between 204 and 218. You can see here, 218, bottom of the box, top, back to 204. Fake breakdown, bear trap, back up to 204, got the big breakout, double top, came back to recheck, failed, bottom of the box, top of the box, fail, and back down to the bottom of the box. So I think whenever you're at the bottom of a trading range and it holds, buy support and sell resistance until the range breaks, right? Until you either get a breakout above 218 or you get a breakdown below 204. And you can, if you take that measured move of $14, a break of 204 brings you right back to 190, right? 14 from 204 is 190. And it's amazing, if you dive into your charts and you start looking at these relationships, I don't think that's a coincidence that, the prior low is the width of the trading range below, because there was a $14 range back up here as well. It broke, and you got that $14 move, but it was short-lived, right? Found support there and broke back up. So here again, I think 204 is your clear pivot. You can be long against that, looking for a move back up to the top of the box. But if it fails, then you got to realign yourself to the downside and look for 190. ARCF, I put this box in place, and I put a midpoint in right here, right around 17. I would have 1950 alarmed, and I would have 1675, 17 alarmed, and you get either a breakout or a breakdown. I think that is your trade there on ARCF. Genomics, we've got a $4 trading range. We have the fake breakout, another little fake down to the bottom of the box, fake, back down to the midpoint at 36. I think you put your alarm at 36 and 38, and depending on how fine you want to trade it, take it long above 38 and take it short below 36. And on a down move, you're just looking for $2, a move back down to 34. But if it breaks there, then you're looking for 31.30 along this line here of support. And then, of course, below 31, it's pretty much all over. Flagship fund, got a midpoint here at 43. Got the top of the box at 46 and bottom of the box at 41. I think you can toggle off of that midpoint if you want to, trade it actively on your, 60-minute chart. But as far as swings go, you're looking for a breakout above 46 or a breakdown below 41 for the next bigger type move. ARCW, this 5250 remains the main pivot, the midpoint of this wider trading range that runs from 59 down to 46. I think you can stay long against the midpoint or short against the midpoint, depending on which way it goes. And you can see that PPO has dropped down into the bearish range, as has RSI. So, and you've got resistance overhead with the 20 and the 50. So just be aware of those levels. If you are in fact going long, you may find little sticking points on these moving averages as price moves up. I wanted to show you ITB. We had gotten short somewhere up in here against the 200. That turned out to be a nice trade. We got to move down to 55. I had sent out a note. You either want to cover that and take your profits, or roll down to the October 55s because we saw this little bounce emerging. So I had rolled down. I got stopped out. I said I had a 57 stop. I stopped myself out, and then we got that big drop. Now I did not re-enter here. Actually, I'm out, so I haven't re-entered this trade. But you can see that this 54.50, 55 area is important. Why? Support, support, resistance, support. Now that's resistance. Now if you see a big breakout on rates, housing is going to be a rate sensitive sector. So if you wanted to be short against 55 right here, I think that's fine. And you're going to be looking for a move back down to 49 to revalidate these lows. And then you've got, if you can take $1.50 worth of heat and put your stop, like 55.50, something like that, and hope that, on any kind of little up move, that runs into trouble here, because now all this is resistance, right? Resistance, resistance, resistance. And so if that rolls over, I think you got to move at least down into the 51.50, and really most likely a move back down to 49. So I'll be taking a look at that today for a possible entry. And then here's our EWG, which is the ETF for Germany. We had taken a short position out in October, and you can see these. I've got a downtrend line, well-defined downtrend line, a lot of touches along that line. Here was a touch, here was a touch, here was a touch, here was a touch. And you can see that downtrend line is really being respected by price. Big bounce here, right into the teeth of that downtrend line, rejected, little bounce, rejected again. I think it was down, 3% yesterday? Oh, this is the weekly. This is the weekly. Okay. But what's really got to happen is these lows at 21.50 have to break in order for this to, really, really pay. So if you were interested in Germany, I would set your alarms at these lows, 21.50, and then if you get a break of that and it sticks, you can see these COVID lows were down in the 17 type area, and that may come as a result of the energy crisis over there, companies getting whacked on margins and all that kind of stuff. I think a lot of negativity is probably priced in, but I want to hold this position because I think either it comes down here and just the bears just can't break it, or it does break. I can't see Germany going off to the races, to the upside. So I think, like any trade, it's either going to work or it isn't. But as long as this downtrend line holds, I think the trade is worth holding. Now, if we get a move that comes back and takes out this downtrend line, a break back above 23 on a weekly closing basis, then you probably want to just take it off, because any kind of breakout above this downtrend line will be a bullish signal. So that's where we stand on EWG. So let's wrap it up there. Let's see how the market handles all these macro numbers today. Remember, we got the big OPEX tomorrow. So, and then next week will be really important. Why? Number one, the week after a big OPEX is usually usually there's a pivot in the market. And then on Wednesday, we've got Jay Powell with the next rate increase, probably 0.75%, maybe even 1%. We'll have to see how that goes. So let's wrap it up there. This has been Chris Best with Traders Profit and Compass. Hope you guys have a good day of trading, and talk to you next time.